SoFi continues to be one of the hottest stocks on the market, but also a very hotly debated stock. Is this a bank? Is it a technology company? What does SoFi's business look like in the future? I think this is a good time after earnings to take a step back and look at exactly what SoFi does and what the momentum is in the different pieces of their business, what management has said about what's going on in this business. Shares have almost tripled over the past year. At the same time, there's been a ton of growth. So what's that balance between value and growth that we want to have as an investor? And is the stock a buy, sell, or is it just something to hold on to right now? I'm going to give the reason that I've been adding to SoFi periodically and will probably continue to do that in 2025. My name's Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's take a step back and look first at what SoFi is doing, because I think that's ultimately what differentiates the company. This is SoFi's homepage. Just a very simple place to start if you're looking at research in a company. What in the world does SoFi do? There are loans that the company offers. Student loan refinancing in particular was kind of an area that they originally started in. All kinds of other student loan refinancing, medical resident refinancing, law and MBA refinancing, private loan refinancing. This is an area that the traditional banking industry just hasn't really been very interested in, for good reason. But that was one of the big opportunities the company saw early on. Personal loans is another unloved part of the lending market. You may be using this for home improvement loans, credit card consolidation, family planning loans, travel loans, wedding loans. These are all the things that they've laid out. And then they have moved into mortgages, very small business for SoFi, but these are kind of the three lending segments. And that lending business has continued to grow steadily over time. Has taken kind of a pause over the past year or so as the company has transitioned from having most of that lending on their balance sheet, being a real bank, to more recently doing what they're calling platform lending. And this is where they signed a $2 billion deal last year with Fortress to provide financing for these personal loans. So SoFi is facilitating the loans, and then Fortress is actually the one that's taking on the risk. So taking on the things like default risk, duration risk, all the financial risk you would normally have with a bank company. So SoFi becomes the app and the platform that people are actually making that application on. It's what the customer is interfacing with. I think that's really ultimately the really important thing. But they're not taking that financial risk in that scenario. So that business continues to grow. The reported revenue there, the fees that they get, doesn't really end up in the lending business. That actually ends up in the financial services business. I'll get to that in just a second. The second big business for them, which was primarily added as part of the Galileo acquisition, is the technology platform. Technology platform is basically they're able to white label some of the solutions that they built for SoFi and for other fintech companies. And then they pay a fee for all of those services. So if you're going to open up a credit card where SoFi is actually doing that work on the back end, but it has an H&R Block logo on it, let's say, H&R Block will pay a fee for SoFi to be doing that work in the background. That's the kind of fee-based business the technology platform is. Lots of different businesses they get in. So it could be savings accounts, could be credit or debit cards. And as more and more institutions move into some of these things, they need to have a white label solution. They don't want to necessarily become a bank or become a real fintech company. So they just want a white label solution. That's where you see SoFi actually win in this business. We're going to probably see more small banks start to partner with a company like SoFi because they're able to provide more technology solutions, things that those companies aren't necessarily going to be able to build in-house, and even potentially bigger banks as well. So a steady growth business, steady profitable business. SoFi has said recently that they've signed some pretty big deals that will help grow that business in 2025 and 2026, even with the US government, but maybe not the kind of business you would pay a huge premium for. What you may pay a premium for is the financial services business. And here again, to go back to their products, this is where you're going to get into things like investing, credit cards, banking solutions, so checking and savings accounts, insurance, credit score monitoring, budgeting. These are all tools a lot of these tools are available in the app, just sort of included as part of the service. And then this is also where the platform fees for the lending business end up as well. But you can see the financial services business has been growing like crazy. This is because people are choosing the SoFi app to become their banking app of choice. It's where they're depositing money. It's where they're taking out their credit cards. That increases this financial service revenue. And now we've seen SoFi move into products like SoFi Plus. This is where you can get SoFi Plus if you have direct deposit, or there's a monthly fee as well. Get a bunch of different benefits from this. things like a higher interest rates, a higher cash back on your credit card. There's also a 1% match on recurring deposits. This is something that a company like Robinhood has done as well. So these are companies that are really digital first, trying to gather more and more assets on their platform. And these are the kind of benefits they're able to do with these kind of services. You also have member benefits for just being part of SoFi. You get some small benefits at SoFi Stadium. There's a referral program, SoFi Travel. So again, it's all about growing the platform and growing the accessible market for SoFi as an overall business, whether you're taking out a loan, whether you're taking out a credit card, or investing with SoFi. So all of these things can grow exponentially. This is what I think differentiates SoFi from a traditional bank. They are not tied to the physical infrastructure and the physical operating costs that you have from hiring individual people to work at banks, to build out those bank branches, to have that traditional infrastructure that we see all over the country with bigger banks. SoFi just doesn't need to do that because they are a digital first bank. That gives them more operating leverage. That allows management to focus on growing the business and the awareness of the business through things like advertising, which may seem like a waste, but it's actually how you grow a business like this long term. Management talked a little bit about this on the last conference call. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. One thing that stood out to me on the last conference call and the interviews that we heard afterwards was CEO Anthony Noto saying, you know what, we're going to give up short-term profitability because we see so much growth potential for the business long-term. One of the ways that we're going to grow the business is with what's called unaided brand awareness. That's basically advertising. It's things like commercials. It's paying to have your name on a stadium. There's not necessarily a direct tie to a dollar spend and a dollar benefit for SoFi. So it's unaided brand awareness, just increasing awareness of SoFi as a brand. And that's what they've seen being successful. The reason that they can do that, and it's more effective than other banks, is because they have much more operating leverage in the business. They could add 1,000 or 10,000 or 100,000 new customers if they signed up tomorrow, because they have that scalability built in the business. That's what I think ultimately differentiates SoFi, is the ability to scale the business. And that's what gets to valuation. The company has about a $17 billion valuation as I'm recording today. Looking at some of the traditional metrics, price to book value is about 2.6, price to earnings multiple on a trailing basis is 39, forward basis, that goes up to 63. Those may seem expensive, but I think SoFi has the ability to potentially 10x or more the size of the business over the next decade. That's why I'm ultimately not too worried about paying the current valuation, because I think there's so much growth potential. Now, it's probably going to be a lumpy ride for investors. There's going to be great quarters. There's going to be slightly disappointing quarters. There's going to be ups and downs in the lending business in particular. But long term, this is the kind of business I want to be behind. It's a digital first business disrupting traditional banking with traditional cost structures, with a completely new and more scalable cost structure that has proven to be a profitable place to be in the market long term. So I want to be long companies like SoFi, like Robinhood. Those are two of my biggest holdings in the asymmetric portfolio, and they will continue to be as long as they're performing well as businesses, which I absolutely think SoFi is today. So is it a buy? Yes, it's absolutely one that I have been buying recently and will add more in 2025, especially if there's any dips in that valuation. But let me know what you think about SoFi in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.